Morning, welcome to Chartbusters. Well, the markets have come off the high point of the day. We're hovering around the 17,600 odd mark. Remember, earlier today we hit a high of around 17,765 odd. So from there, we're down close to around 160 points. Not just that, the breadth of the market now is in favor of the decline. So just pull up the crisscross lines. That'll give you a better picture. Hey, Mangalam.
Hi, Nigel. You know, the level that we retraced from last week was 17,777. So just about 12 points away from the level that we retraced from today as well. Maybe the street believes that the big range that we formed all of last week, is something that the markets will meander around. But as we speak, the 17,600 mark is important because it's also the 20-day moving average. So if there has to be any recovery, this could be one of those points. So we'll watch out for that currently at the low point of trade. First up, all the top stories that we're tracking. A strong start fizzles out as the Nifty slips around that 17,600 mark, losing over 100 points from the day's high as IT and bank give up morning gains. Autos and healthcare as well as oil and gas hold out. The broader market trades mildly in the green.
And Morgan Stanley initiates coverage on Apollo Tyres with an overweight trading. They set their target price at around 329 rupees a share, citing impending turnaround in their India business.
Sources say that Biocon has sold 5.7% stake via a big block deal in Syngene. Equity worth nearly 1,250 crores has changed hands at a price of 564 rupees a piece.
Kalpataru Power bags an order worth nearly around 1,350 crore rupees. The stock is up a good 8%.
And it's a bumper debut for airport service aggregator Dreamfolks. The stock lists at a 56% premium to its issue price.
All right, well, we've come off quite a bit actually from the day's peak, so just keep an eye out there. But let's see whether or not we see some support around these levels. The only glimmer of hope is the mid-cap index is still trading very mildly in the green. Ashish Kayal joins us to tell us whether or not this dip is worth buying into or he would rather stay away. Hi, Ashish. Morning. We had a good last few days, but this morning, well, the bears have said it's not as good as you just show up and you participate and you make some money, because the bulls have got trapped actually at the upper end. Do you believe, but post this 150-point dip that we're seeing intraday, do you think that it should get bought into?
Hey, morning to you and Mangalam as well. See, very importantly, Nifty has been attempting to cross that 17,756. The reason I'm telling you that level, that's a Gann square of 9 level, which I've derived. And it has tried multiple times. One attempt was on 25th August, then again attempt that we saw was on 30th August. And again today there was an attempt. But we are failing around that level multiple times. So which means that the bulls are not able to drive the market beyond that range of 17,756 to 17,780 levels. And on the downside, the bears are not able to drive it below that 17,500 mark. So that's the broad range of the market. And today we have reversed from the upper end of the range. So I think there can be some selling pressure that we can witness. Nifty can again move towards that 17,520 support level on the downside. So I'm not going to buy this market right now. I'm going to play pure intraday over a short term, expecting a move towards 17,520. And on the upside, the stop loss has to be kept around 17,700 levels. And for a positional trade, it has to cross about 17,756 as far as the index is concerned.
All right, we take that point. As we speak, a couple of stocks are making the lows of trade, and they belong to the FMCG pack. Case in point, HUL, that's at the low point. Nestle is the other one, which has fallen about 300 rupees in today's trading session versus the previous close, but over 160 of those have come in just the last few minutes, currently at the low point. Ashish, what are the stocks that you have on your radar? Are there any buying opportunities or selling ones?
I'll still look for buying opportunities right now, having the market in a range, but specific stock action is still witnessed. So the first stock on the buy side is going to be Tata Power. We can clearly see the stock is bucking the trend, trying to attempt on the upside. And if there is any kind of stabilization in the broader market, the stock can do extremely well relatively. So Tata Power initiate a buy call with a stop loss of around 234 for the target of 260 on the upside. And the next stock on the buy side is going to be Triveni Engineering. We can clearly see a very strong volume being picked up here. And the stock is giving a higher high, higher low formation, which is suggesting that now it's bottoming out and giving a breakout on the upside, bounce back from its 20 days average. So Triveni Engineering long positions can be created, keeping a stop loss of 235, expecting a target of 270.
Okay, all right. Thanks so much, Ashish, for joining in and filling us in with those quick details. By the way, keep an eye out on Blue Star. They're backed an order worth 390 crore rupees from the Bangalore Metro Rail Corporation. So that one as well should be in focus. Maybe we'll try to touch base with the management and, in fact, get more on that.
That's right, Nigel. The fact that they won an order is great, but with the kind of flooding that is taking place in Bangalore, it will be interesting to see how they execute it and, how they go about the, things that are taking place there.
Absolutely. All right. Well, let's move on then. I think it's time for our special segment, which is MC Pro. We give you a few ideas for profit. And today, in fact, we have Nitin Sharma, who's joining in to tell us about a stock that is tracking rather closely. Nitin?
Saregama reported good 1Q result in a seasonally weak quarter. Revenue jumped 61% year-on-year, led by the recovery in the caravan sales. On the margin front, the EBITDA margin expanded sequentially but contracted year-on-year due to rise in the content production cost. Division-wise, music segment revenue growth was flat, but margin expanded by 150 basis point to 47.5%. Film and TV division revenue tripled over the last year on a small base, but fell 27% sequentially in the quarter. Saregama launched its live event business in the quarter with 6 concerts. Management sees 5 to 10% margin from this business. We estimate that at 5% margin, the company can generate anywhere between 2 to 4 crore profit from this business alone, which makes it a lucrative segment. Saregama's revenue expected to grow at 20% annually for the next 2 to 3 years, while the margin to be around 30%. At the current market price, the stock is trading at FY24 PE of 41 times. We recommend investors to gradually accumulate this stock.
All right, with that, we slip into a short break. On the other side, we have management of TD Power Systems joining in to give us an outlook for their business going ahead. Welcome back. You're watching us here on Chartbusters. The management on our radar right now is TD Power. The reason why we're talking about them are a few. They do have a fair amount of domestic triggers, but international business as well. Is there an impact or not? The stock is lower in today's trading session, but if you pull up a longer horizon, you will see that it's nearly doubled from its 52-week low, and importantly, it's just about 6 to 8% away from its 52-week high as well. There you have it, the big move that we're seeing. We do have with us Nikhil Kumar, who's the managing director of the company. Thanks a lot, Nikhil, for joining in. The first question is related to your exposure to Europe right now. 60% of your revenues coming from exports. How much of that is, impacted by what's taking place in Europe? Are you positively or negatively impacted? And Turkey as well. There's serious depreciation in their currency. You've limited your operations there. Are you looking to, temporarily pause your operations in Turkey?
Yeah, for the first question, actually we're seeing a positive effect of the crisis in Europe because there is an energy crisis, there's a shortage of electricity in the market, and there's a big push now towards more renewable sources. That means more towards waste to energy, garbage incineration plants, as well as wind. So investments are accelerating in this sector. And we're seeing a huge increase in the inquiry pipeline as well as orders for this year, which will be for execution next year. But nevertheless, it's a very, very positive outlook for us from the European market. And we are right in the middle of things, well positioned in this market to get a good chunk of additional business which will come from here. On the second question about Turkey, you're right. It's the Turkish economy is really in a bad shape. Inflation is at something like 60–80%. The currency depreciation is, quarter on quarter, we're seeing 15–20% depreciation of currency. Basically, there's no way that they can make investments in that country for power plants because most of the investments that took place in the past came with foreign loans, with foreign currencies, in dollars and euros. And with the currency depreciating so rapidly, there's no way that any person who takes a loan in foreign currency can pay back So the market has come to a complete standstill in Turkey. We are examining options of either having a very skeletal workforce over there, or even temporarily closing down for some time and then waiting until things get better. It's a big market, it's a power shortage market, so eventually it will recover. But looking at the way things are right now in Turkey, I think it could even be 2-3 years.
Okay, so you said, Nikhil, if I got that correctly, you briefly said that maybe you could shut down as well operations in Turkey?
Yeah, it's that's the extreme situation. But this year we will still do around 25 crores in Turkey.
All right, so that's.
But we're not taking any fresh orders for next year because it doesn't make sense to just to have 2 machines or 3 machines for next year and keep the entire facility open.
Got it. Okay, all right. So we got that about Turkey as well as the exposure to Europe. You're saying, in fact, you're seeing added amount of inquiries that are coming in there, and business is looking good in Europe. So we take that point on board. Now, in terms of order inflow, there's a lot of fears about slowdown, about recessionary fears as well. Now, in the first quarter, I think your order inflow was roughly around 200 crores, I'm guessing approximately. And for the year, yes, I think you all were guiding for around 750 crores of order inflow. Is there a revision to that number? Will it be higher? Will it be lower?
No, right now I'm sticking to this forecast. You see, we are seeing, as I said, a good situation for us in Europe, although there are recessionary trends in the market. But the energy market is in a deficit situation, in a shortage situation. So there is a huge demand for energy in general. And in India, which is, of course, our home market, there's a lot of increase in business because of the capex cycle. So in terms of positioning, I think we are well positioned in both our major markets, and we will see the positive impact of that. But I will try to give a revised guidance to order inflow when we publish H1 results, and we talk to the investors at that point of time. I hope to give a positive upgrade on the order.
So you think it could be skewed to the upside, but there's no risk on the downside to the 750 crores.
It's going to be skewed to the upside.
Got it.
All right. And if you could give us some indication of the kind of order inflows that you've seen in the second quarter so far, maybe that could give an inkling into the trajectory in which the company is going, because the first quarter that you did over 200 crores, 203 odd crores, we're closing in on the end of the second quarter as well. We do have about 25 days, but you've seen majority of the second quarter so far.
Yeah, Mangalam, all I can say without giving specific numbers is that it's been extremely strong, and the momentum continues. And as I said, I hope I can give you all our investors a revised, upgraded outlook for the order inflow for this year.
Okay.
I'm very positive about the situation.
Okay, would you say the same of your revenue as well as the 900 crore top line guidance that you had given, that you will revise it upwards, perhaps with a positive bias?
I'm holding on to everything right now.
Okay.
I'm cautiously optimistic about the situation. We still have time to pick up orders this financial year and execute this financial year. So just give me, another month or so, and then we'll come up with the numbers.
All right. So, stripped of the intercompany revenue, excluding that, 900 crores is the revenue guidance that you'd given earlier. So you're sticking to that. Also, I wanted to ask you, when do you think you'll hit peak levels? I think in the past you've said that your capacity can house close to around 1,200 crores odd without too much of capex. Do you see that happening, say, by FY24, or do you see it happening in FY25? That's point number one. And also margins, you said that as well is skewed to the upside. Or utilization levels are improving. You'll get the operational leverage as well that plays out. And input costs are cooling down. So what is the margin guidance? Go ahead.
So all those factors we talked about are in play, Nigel. We are seeing some cooling off of the raw material prices, but on the other hand, there's also a depreciation of the rupee versus the dollar. So imports are definitely more expensive, especially things like copper are priced in dollars. So the depreciation of the dollar has taken off some of the benefits that we got in terms of actual price reduction of copper. But in general, our margin expansion will take place from operational leverage and not so much in terms of gross contribution expansion. So when we increase our sales without increasing our fixed costs in the same proportion, we will see margin expansion taking place.
Give us a number, Nikhil. Give us a
There
number.
will be some. Sorry, there will be a little bit of some movement in the gross contribution on the basis of pricing as well as some relief taking place on the raw material side, but it's not going to be very significant.
Right. So you, in the conference call, had said 17 to 18% in terms of an EBITDA margin. You've done about 13% in the first quarter. 17 to 18% is what you're sticking by. Is that so?
No, I said 17 to 18% will be possible once we're hitting this level of 1,100 crores, 1,000.
Okay. And this year would be what?
At that level. And now I think we're going to be somewhere between 13 to 14%. 14 to 15% is possible.
And when do you hit this 1,100 crores that you're talking about? Going by the good order book that you have, things are picking up. You're seeing a big opportunity as well. FY24, do you think you'll be closer to that level?
It will be hard to do it next year. It will be hard to do it next year in 24, but I think it's definitely going to be possible in 25.
Right. Just a word on a couple of sectors. The first one was railways. You've been guiding for some increase in share of revenues coming in from the railways. Could you give us some clarity on how much does it contribute right now? What is the opportunity here? You said that maybe sometime next year is where you can get increased revenues from there. And the second one is on distillery. I mean, we're talking about higher and higher percentages of ethanol blending in fuel. How does that change things for you for the sub 10 megawatt generators?
So as far as the distilleries is concerned, there is a huge investment taking place in new distilleries, and every distillery needs a small power plant, a steam turbine generator, and a steam turbine. And we are and we have a very strong relationship with both the major steam turbine manufacturers in the country, that's Triveni and Siemens. And we hope to get a very large market share in this segment. Or we are getting a large market share, and we hope to preserve that market share. So this is going to keep expanding. At least, it's going to be seeing big business this year. We're going to see it continue into next year. There's almost unlimited demand for ethanol blending. At least within short term, we will see this business keep expanding. Coming to railways, currently we're doing about 20% of our business with a major multinational company who is supplying the locomotives to Indian Railways. That's what we have right now. But we have supplied our motors to the Indian Railways directly. It's in for qualification, and after the qualification is done, we will see that 1,000 crore market will open up to us. Okay. And I hope to get a reasonable chunk of that market within the next 1 year. All
right, Nikhil, before we let you go, what if someone, you do business with a lot of MNCs, a lot of big corporates as well. What if someone gives you that big fat check and they say that, the generator is essential for various of their needs as well, because they buy the generator, then in fact they set things up. Will you sell out? Have you ever thought of it?
What will I do? All I can do is in my life is produce generators, and I need to work. So this is what I'm destined to do, and I want to keep doing it.
But what if a good offer comes? Will you think about it?
Oh, Nigel, this is something that I can't talk on TV.
Okay.
So
all right, maybe we'll keep a track on that. But for the time being, going by indications, business is looking up. Thanks so much, Nikhil, for stopping by. And
thanks a lot, Nigel.
Filling us in with, what lies ahead for TD Power. Remember, the stock actually was a bit of an underperformer for a couple of years. But if you look at it in the last 3 months or so, you'll see the stock has been a big outperformer. So we said we'll invite the management and get a bit of sense of business. 25% up in the last 3 months. Slip into a short break, come back, continue to focus on markets and a whole host of stocks. Well, a bit of a bounce is what we have seen from the lows. Just keep an eye on a couple of stocks in the broader market. Suzlon Energy, the stock dipped into the red, but suddenly it's seen a bit of a spurt from the low point of the day. So that one should come up for you on the screen. Intraday dip got bought into. And Sanghi Industries as well. Well, valuation-wise, it's been fairly attractive. Yesterday, Nimesh said on D-Street Chatter that maybe there could be a big corporate announcement that comes out soon. Let's see whether or not that happens. It has the capacity. They've been struggling with the sales volumes. And let's see whether or not there is any other big announcement that comes in there. But let's focus on the tire stocks. Well, Sonia joins us. She's tracking that space. And Apollo Tires is the one that she's tracking. Morgan Stanley has initiated coverage on the stock with an overweight rating. Sonia, tell us more.
Well, the stock is having a big run this morning. It's up almost about 6% now 5.5% higher. As you said, Morgan Stanley has initiated coverage with an overweight rating on Apollo Tires. They have a target price of 329 on the stock, expects a 31% upside to the current market price. Now, they're saying that the Indian business is expected to report a turnaround because of the strong performance that we're seeing in the passenger vehicle space, and Apollo Tires has a market leadership there. It's the second largest player in the domestic passenger vehicle market. Also, they're focusing on controlling costs and expanding margins, so that's the reason why Apollo Tires is in focus.
All right, Sonia, thanks a lot for that. We'll let you catch your breath on that one. That's about Apollo Tires. And we're out of time on this edition of Chartbusters. A big move out there on a lot of names, including Apollo Tires. We take your leave. Stay tuned. Trading Hour comes up next.